Welcome to Market Velugu, Light on Markets. Here I decode global markets to macro trends and long-term market cycles in a simple, visual, and relatable way. Gold, silver, forex, Bitcoin, and cryptocurrencies. All kinds of assets will be analyzed using chart-based technical insights. But remember, this content is purely for educational and informational purposes only and should not be treated as financial advice. In this video, we will explore the fascinating story behind the fall of the US dollar and how it set the stage for the return of gold. To understand where we are today, we must first look back to when gold itself defined the value of money. Before paper money ruled the world, gold was the ultimate truth of value. Nations trusted gold. It was scarce, tangible, and timeless. Every paper note in circulation was backed by real gold held in vaults. This system kept currencies honest, a promise rooted in metal, not words. But when war and ambition demanded more money than there was gold to cover, the system began to strain. As World War I erupted, nations quietly suspended the gold standard, printing to survive what gold could not fund. The Great Depression was the longest and most severe economic collapse in modern history. During the Roaring Twenties, America was booming. Speculation, credit, and confidence fueled a frenzy. Ordinary people borrowed money to buy stocks, believing prices could never fall. But in October 1929, confidence broke. Panic selling began. The Dow Jones crashed nearly 90% from its peak. Between 1929 and 1933, nearly half of America's banks failed. And because the US was still under the gold standard, every dollar had to be backed by gold. Governments couldn't print their way out. As banks collapsed, the supply of money itself shrank. Prices fell, wages fell, and unemployment soared. Global GDP fell by 15%, 15 times worse than the 2008 crisis. What began as a financial panic turned into a humanitarian disaster. The Great Depression proved the gold standard was too rigid for a modern, crisis-prone world. It preserved gold, but destroyed livelihoods. By 1944, the world was rebuilding from the ruins of war. 44 nations gathered in Bretton Woods, New Hampshire, to design a system that would never collapse again. The solution was ingenious. Peg all major currencies to the US dollar and peg the dollar to gold. At $35 per ounce, the dollar became as good as gold. The United States could do this because it held nearly 70% of the world's gold reserves, most of it shipped from Europe during World War II for safety and supplies. The Bretton Woods Agreement made the US dollar the anchor of global finance. It wasn't just a currency anymore. It became the world's trust. By the late 1960s, the dream began to crack. Wars, especially Vietnam, and growing deficits made it impossible to back every dollar with gold. Foreign nations began losing trust and started demanding gold for their dollars, draining America's reserves from 18,000 tons to barely 8,000. Between 1959 and 1971, foreign central banks converted over $12 billion in dollars into gold. On 15th August 1971, President Richard Nixon went on television and closed the gold window. In one night, the world moved from real money to paper promises. For the first time in history, the global reserve currency was backed by nothing but faith. After losing the gold anchor, America needed a new system to protect its currency. In 1974, a secret pact with Saudi Arabia changed everything. OPEC nations led by Saudi, Iran, Iraq, and Kuwait agreed to sell oil exclusively in US dollars. In return, the US offered military protection and economic support. From that day forward, every country on earth needed dollars to buy energy. Demand for dollars became permanent because oil ran the world. The dollar survived, not through gold anymore, but through oil and power. Printing money always comes with a price. From the dot-com bubble to the 2008 crisis to the pandemic of 2020, every crash was met with the same cure: more money. The US national debt exploded, crossing $37 trillion in 2025, now over 125% of its annual GDP. About $30 trillion debt is publicly owned by investors, institutions, and even nations like China and Japan, each holding over $1 trillion in US debt. Another $7 trillion sits in government funds, Social Security, defense pensions, and healthcare. The dollar became the world's most used and most overprinted currency. Behind the scenes, inflation quietly eroded purchasing power. And in May 2025, Moody's officially downgraded the US credit rating from AAA to AA1. Confidence, once absolute, began to fade. History moves in cycles, and every paper system eventually meets its limit. As faith in fiat currencies weakens, gold is quietly reclaiming its throne. Central banks around the world are hoarding gold again, preparing for a new era of trust backed by substance, not promises. From $35 an ounce in 1971 to over $4,300 today, gold has outlived every currency. It doesn't default, it doesn't go bankrupt, it simply endures. The question now is, when dollar fails, what will rise in its place? Gold, the ancient constant, is once again whispering that empires may fall, but value never dies. We are witnessing the early dawn of a new monetary era where Bitcoin, perceived as digital gold for the digital age, and physical gold may rule side by side. After the Nixon Shock, gold soared from $35 to $875 in 1971 to 1980, a 25-fold rise in less than a decade. Then it corrected to $250 by the year 2000, before climbing again to $1,900 in 2011. By 2015, gold retraced to $1,000, and since then, it's been on a relentless ascent. Today, in October 25, it stands above 4,300.
If you like this video,
if the Federal Reserve continues to cut rates
and subscribe.
and geopolitical tensions persist, $10,000 gold is no longer unthinkable. History does not always repeat, but it often rebalances. And in that rebalancing, the world rediscovers what true value means.